So should a change in tariff policy change your investing strategy going forward? Let's bring in Neuberger Berman, President and Chief Investment Officer, Joseph Amato. Joe, I know you like small and mid-sized companies here, but with these macro conditions, it can be hard to invest, no?
Certainly, the macro conditions have kept our heads spinning in just this last couple of days with the latest tariff news. It feels like we're still going to be moving into a period where tariffs are going to be an issue. And if you end up with a tariff rate that's in the high single digits, I think it still has an ability to weigh on growth and push up inflation a bit. But I think some of the more worrisome tariff levels that were announced in early April seem to be a bit off the table. And I think that sort of left tail risk has been taken off. And that's partly why we've seen the market bounce back.
Do you have any expectation, should investors have any expectation, that in a way this takes off some of the pressure for countries to negotiate quickly? Because, boy, I mean, it's kind of like that situation with the law firms. Maybe if you do a deal too quickly, then you figure out the pressure that was put on you wasn't exactly legally sound. You wish you hadn't.
Yeah, it feels like the administration does have different pathways to put tariffs in place that would still keep pressure on other countries to push forth on getting a deal done. But if I were another country right now, I probably would take a step back and want to have a bit of a wait and see attitude as to where things actually come out in terms of the president's ability and the administration's ability to impose these tariffs.
How do you play emerging markets then?
Well, emerging markets is, there's a wide swath there. There's China, there's India, there's, Latin America. So it's hard to generalize broadly. We have generally been more constructive on developed markets. Earlier in April on the big pullback, we upgraded global equities primarily driven by developed markets outside the U.S., which had been a significant underperformer over the last couple of years. So we think some of the initiatives in Europe, for instance, where they're putting in place more significant fiscal stimulus to their economies is going to be helpful. There's also a relative valuation differential between the U.S., so we think that's where we would lean emerging markets right now. If you look to emerging markets for growth, but growth is slowing down in a number of those markets, and in India, valuations are pretty expensive. So right now, we'd probably lean more into value-oriented markets outside the U.S.